Welcome everyone to this Tuesday edition of Inside India. I'm Sri Jegarajah. Your headlines: markets are under pressure once again as Trump ramps up his attack on the Fed, sending the dollar to multi-year lows and gold to fresh record highs. India and the United States are talking up progress on bilateral trade talks and meetings between Prime Minister Narendra Modi and US Vice President J.D. Vance. And India imposing temporary tariffs on some steel imports as it targets cheap imports from China. Right, so the narrative that is really disturbing the global markets is the fact that President Trump is being openly critical of Fed Chair Jay Powell. The Fed's independence is being challenged and questions, and the markets are reacting negatively to that setup. On top of that, there is the uncertainty created by the tariff dynamic, although off late we have seen an element of a de-escalation, and we are still within that 90-day period of a tariff pause. There are implications for India as well. We'll get onto that in a short while. But in the here and now, we are seeing some negativity in the Asian markets, most defined on the TAIEX on Taiwan, the benchmark there down by 1%. New Zealand is off by 0.8%. And the Southeast Asian markets are mixed at this stage. We've got the Straits Times in Singapore leading up by 1.6%, although Malaysia is underwater to the tune of 1%. Let's also take a look at the currencies. Dollar at 3-year lows is the big story, taking a hit after President Trump's comments against Fed Chair Jay Powell sparked another wave of uncertainty in the markets. We've got the dollar index, DXY, at 98.23, dollar yen 140.35, euro dollar 115.25, and cable sterling against the dollar let's call it 134, pivoting around that handle. While the dollar took a hit, gold saw more demand, safe haven demand, and it hit as a result another record high of $3,430 an ounce. Right now, spot gold at 3,474, pivoting around that level. Now, India-US trade talks are still in focus. The US Trade Representative Jameson Greer also confirmed the terms of reference to lay down a roadmap for trade negotiations with India. He also welcomed India's constructive engagement. This comes as US Vice President J.D. Vance is currently on a 4-day, largely personal trip to India. Vance met with Prime Minister Modi yesterday, and a statement from Modi's office noted efforts towards cooperation in energy, defence and strategic technologies. The visit is also seen as paving the way for Trump's visit to the country later this year for the Quad defence meetings. Indian markets join us in a little over 40 minutes. Here's what GIFT Nifty futures are indicating. Let's pull up the board and show you what the futures are telling us about the session ahead. 24,174. So where we left off yesterday was at 24,125. So we are looking at a modest incline for Indian equities today. Let's bring up the dollar rupee exchange rate. 85.1510 is where we stand. Right, I'm delighted to say that Hiren Dasani is with us now, co-head of Emerging Markets Equity at Goldman Sachs Asset Management, joins me around the desk here at the SGX. Hiren, very good morning to you, and thank you for joining me on Inside India. So at an index level, just how volatile do you think the short-run picture will be for Indian equities, and are pullbacks opportunities for patient capital?
First of all, Sri and CNBC, thank you again for having me here. Always a pleasure to talk to you guys. I think, if you look at since 2nd April announcements, Indian market is probably one of the only few markets which is actually up from this close of 2nd April US. And it's very short term. We are just talking about 2-3 weeks period here, but markets do tell you something even in the directionally where they are going. And the message for me is that India is less correlated to the rest of the world. India is more domestic oriented economy. And because of the fact that India is more domestic oriented and India's growth is going to be less impacted by the trade war and all the other negative headlines which we are hearing. It provides a good diversification opportunity in this more volatile world, and I think investors are appreciating that. Now, if you take a step back, before the tariff announcements, Indian market drawdown started from the September last year onwards, and largely it was India-specific factors. I would say there was a bit of a soft patch of the economic growth. The valuations after 2 years of very strong returns had risen more expensive compared to India's own history as well, and some of the regional markets had started to do well. So those were the reasons for the start of the pullback, and I think we can talk more in detail, but coming into this year, it looks like most of the India-specific factors, domestic-oriented factors, are now broadly tracking in the right directions, and that's where there is a sense that economy growth has bottomed out.
Yes.
So,
but we can't, if I may, we can't ignore the fact that drawdown from the highs wiped out nearly $1 trillion in market cap. Is there another leg to go in what appears to be a mid-cycle adjustment, or was that the clear out that we needed to have? And was it healthy, and have we seen the worst of that?
Yeah, so, I mean, take a look at the numbers, right? 8% year-on-year growth in GDP for the fiscal year 24. And then you had a patch of slowdown where the September 24 quarter was as low as about 5.6%, if I'm not wrong. From there, growth rebounded to 6.2% in the December quarter. And it looks like the full year March 25 will close at about 6.3, 6.4. And based on most estimates, which we are seeing by the reputed economists, looks like FY 2026, March 26, 1 year forward from here on, will be also in the range of 6.4 to 6.5. Now, 6.4, 6.5 growth was before the Liberation Day announcements and subsequent volatility around that. But the downward revision on the growth is also not more than 20-30 basis points. So what I've seen is that people have started to cut the estimates from 6.5 to about 6.2 because of, let's say, secondary and the tertiary impact of the trade war. So the limited point I'm making is that, yes, there will be some downward revision, but compared to what you are seeing in the rest of the world, it's going to be far more limited. And India would still be the fastest growing economy, and India would still likely deliver double-digit corporate earnings growth next year, which is what, as investors, we are quite excited about. So,
notwithstanding the short-term speed bumps, how compelling are India's long-term fundamentals, domestic demographic dividend, rising middle class, urbanization, digitalization, and what are the associated investment thematics that are associated with the outlook?
Yeah. So we are quite excited about the long-term opportunity that India presents, and some of that you kind of alluded to. But more structurally, it is demographics. It is about the fact that there are several reforms which have happened in the last 10 years, which is kind of prolonging the business cycle. Stability in politics, continuity in the policy, rule of law, independent institutions. Some of these things are rare to see nowadays in emerging market, especially, and India is doing a great job at that. So those are all the structural reasons. I mean, India has grown at about 6.5 to 7% real GDP, or about 11% nominal for not 1 or 2 years, but last 25 years. And it is quite likely that India would deliver similar growth for the next 7 or 8 years at least, if not longer. So this is definitely a stronger for longer story. Some of the themes which we are quite excited about, the first is the premiumization of consumption. The second is the manufacturing competitiveness, which India historically was not very strong, and now it is becoming more competitive. And third is the financialization of the household savings, where domestic equity ownership keeps going up because more and more households are encouraged and incentivized to invest more in equity markets. So consumption, financial services, manufacturing. These are some of the areas which we are quite excited about.
In the immediate term, how big a winner is India from what appears to be significant tariff differential or arbitrage? India has 26%, and that may even go under a BTA versus 125% for China. Are foreign investor portfolio inflows returning to the buy India, sell China narrative, given this tariff overlay that we have now?
So we have seen substantial outflows starting September last year. Year to date also there are substantial outflows. It's only in the last few trading sessions that we have seen the reversal of that trend.
Yes.
As I think there is belief that there is more likelihood of India among the first countries or among the first batch of countries which will enter into bilateral trade agreement with the US, and because of the less correlated nature of the economy, I think the excitement about India is coming back among the foreign investors. I would say that in the near term, the uncertainty means that everyone has some negative revision, as we just spoke about, but relatively speaking, India looks much better off, and that's what I think. Investors are now betting on.
Yes.
That India's own growth momentum has bottomed out. It's looking better from here on, and India has both willingness and ability to enter into constructive trade negotiations, which, as the headlines were just showing, they are.
I'm glad you raised that, Hiran. And what are the odds, in your opinion, of a US-India trade deal? And will Vice President Vance's visit this week further those negotiations? And if it is finalised within the 90-day tariff pause period, is that already in the price, or can Indian equity benchmarks and perhaps the rupee gap higher on the headline?
I mean, in the near term, it's always very difficult to predict. I would only say that this is one of the markets which will likely compound for a long period of time at about 11-12% in rupee terms. And that's the corporate earnings growth which we expect from the market from the long term. And there is no reason to believe that why the returns should not coincide with the corporate earnings growth in the long term. I think in the near term, there will be so many factors, whether probability of the deal, oil price, domestic growth, global uncertainties. There will be so many factors which can impact the near-term market sentiments. Yes, valuations have corrected after the pullback. Valuations are looking more reasonable now, both in absolute and the relative terms. And I think this is one of the few economies where the corporate earnings growth visibility is one of the highest.
What do you make of Q4 earnings so far? Is it a story of resilience and growth, or is there evidence, or are we going to see evidence, and we are going to be hitting the stride of Q4 earnings this week with some big names? Evidence of uncertainty, capital spending slowing down, layoffs, we already heard that amongst some of the IT services. And how concerned are you of overall guidance risk and that being priced negatively by the markets?
So I think let's look at, it's still early days. The earnings season has just started. We have seen some of the leading IT services companies reporting, and we have seen some of the leading banks reporting. In general, IT services companies have been more cautious, not surprisingly, because they derive most of their revenues from the US businesses, and the US tech spending or the US IT spending is likely to be softer if US were to slow down and potentially go into recession. So it's not surprising that IT is one of the kind of worst performing sectors year to date today in India. On the other hand, financials have done much better this year, and there is a belief that the credit cycle, which we saw in some part of the segments of the financial services, especially the unsecured personal loans, credit cards, where the credit costs were going up earlier. Now there is a belief that the credit cycle has peaked out, and that's where the domestic focused sectors are doing better. There is likelihood of earnings revision upwards in the domestic focused sectors, but potentially some downward revision in the earnings estimates for some of the export oriented businesses.
Hiran, we've just seen a line here on Reuters reporting that Flipkart is going to relocate the holding company from Singapore to India, and many believe that this could be a step towards an IPO. How do you feel about the IPO market and the pipeline in India given this uncertainty. But then again, the counter narrative to all of this is that India, as you have been saying, has very strong growth prospects in the longer term.
So this is very important, right? For a large company like Flipkart, the confidence to potentially get listed on the Indian markets, it shows you the depth and the breadth of the Indian market. Let's say 5 years ago, every tech company would have liked to get listed on NASDAQ, but successful listing of many consumer internet companies over the last 3 years have demonstrated that you can get the right valuation in India market. There is enough breadth of the investor base. There is local investor base, which is now providing a very deep pool of capital, domestic mutual funds and all that. So I think over time, my sense is that there is more to come in terms of quite a few excited IPO opportunities. And obviously near-term IPOs will be driven by the market sentiment. But in general, I think the fact that companies want to list proactively in India rather than seeking the global listing, it tells a lot about the depth and the breadth of the Indian market.
The challenge for policymakers is to balance fiscal discipline with the need to possibly deploy economy-wide stimulus if there is a global growth scare. What are your thoughts on where the appropriate policy stance needs to be for both the RBI and the finance ministry?
So I think part of the reason why the growth has bottomed out is that monetary policy has definitely turned accommodative. Last year, monetary policy was kept neutral in terms of stance, but the liquidity was very tight in the money market, and interest rate transmission was not happening. This year, we have seen a marked difference in the monetary policy. Fiscal, we still think that government is on the path of fiscal consolidation, although the derivative, second degree derivative, in terms of the how much reduction of the fiscal deficit, bulk of that reduction has already happened. So incremental fiscal deficit reduction is still happening, but I would say the support for the economic growth is likely to come more from the monetary policy and easier liquidity situations.
And on balance, we are seeing strength in the Indian rupee because of this weakness in the US dollar. Is a stronger rupee net a positive driver for earnings and equity benchmarks?
I mean, we always say that over time, investors should expect some depreciation of INR versus US dollar, which is driven by the inflation differential and interest rate differential. In the near term, it's more driven by what happens to the broader dollar movement. But structurally, current account deficit of India is coming down. Lower oil prices are certainly helping. More services exports are helping. And more adoption of the renewable energy is kind of structurally helping the current account deficit. So if India can manage current account deficit somewhere around 1% of GDP or less than that, then I think, by and large, there should not be much of a problem on the currency.
What could go wrong with the present setup? And we were talking earlier about the excess capacity, the second round effects of tariffs, and how excess capacity, like in the steel industry, could be deployed elsewhere, and that's why India is taking action against Chinese steel. IT services, we've heard about that, managing expectations, laying off staff, preparing for what could be a recession in the North American markets. Is 6.7% headline growth at risk meaningfully, or is the underlying narrative still resilient?
I think anything above 6% would be respectable and still possible in an environment like this. 6.7 may be a bit of a stretch. I would say in terms of risk, as of now, they are more coming from the global uncertainties rather than domestic ones. Obviously, we don't have to worry about elections. We don't have to worry about the political continuity in the near term. So the risks are more about what could be the secondary or tertiary impact of the global slowdown on India, and also partially about, let's say, if let's say excess production in China were to be diverted into the other markets, which then finds its way into India, then can it hurt the Indian domestic industries potentially? Those are the areas which we need to be watching out for.
Could even a credit rating upgrade be on the horizon for India if it is such a bright spot in the global economy? And some might even say it's a safe haven or an emerging safe haven.
Yeah, I think logically at some point of time it should, but I don't have any strong insights into when that would happen.
Hiren, we'll leave it there, sir. Thank you very much indeed for joining us this morning and talking us through the opportunities, especially for longer-term investors in the Indian markets. Hiren Dasani there from Goldman Sachs Asset Management. We are back in 2 minutes. Welcome back. The US is finalising tariffs on solar imports from Southeast Asia. JP Yong has been following this story. So it's not just the headline tariffs, it's sectoral tariffs as well. JP, where do we stand?
Absolutely, Sri. And, you know, just when you thought it was safe to get back into the water, done, you see more tariffs now on solar panel exports to the U.S. from Southeast Asian countries. Now, this follows complaints from U.S. domiciled solar panel manufacturers who allege that Chinese factories have been using or setting up factories in Southeast Asia to skirt ongoing trade barriers in order to bring their cheaper solar panel imports to the United States. Now, the problem here is they also accuse them of receiving unfair subsidies and pricing them below market to try and at least flood the markets in the U.S. via these Southeast Asian back channels, actually. Now, you'll notice here that the tariffs vary, actually, including the highest levied on solar panels coursed through Cambodia at a whopping 3,404% effectively. And that's because Cambodia refused, apparently, to cooperate with regards to an investigation, thus the outsized tariff. Now, this is interesting because actually, of these four countries, Cambodia actually supplies the smallest, actually, in terms of solar panel exports to the United States. Actually, just about 4,575 panels as of 2024. Combined, the four Southeast Asian countries you see there account for about 85% of solar panel exports to the United States. And apparently, if you look at it, actually, what they import from China is only about 68 megawatts in terms of solar panel imports. Now, also interesting to note at the end of this chart, Sri, is that India is the fifth largest exporter of solar panels to the United States. They have not yet been levied a tariff, actually, for their exports to the U.S. of solar panels. But again, time will tell because, as we know, that a lot of the issues, at least, and a lot of the trade actions and tariff actions of the U.S. Trump administration continue to evolve. And don't be surprised if India suddenly gets caught in the fire line, because as you mentioned, they are the 5th largest exporter of solar panels, at least, to the U.S., and so far not yet subject to tariff action. But again, that could change in the coming months.
Tributes are pouring in for Pope Francis, the first Latin American leader of the Catholic Church who died on Easter Monday from a stroke and cardiac arrest. The pontiff was 88 years old. NBC's Holly Hunter has more on the legacy of Pope Francis.
As soon as the news of Pope Francis's death was announced, cardinals from around the world have started making their way here to Vatican City. Now, tomorrow will be the first meeting of cardinals. Not all the cardinals will have made their way to town by then, but the first meeting of the cardinals who are in town. And the papal funeral is expected to be held within 4 to 6 days, and on the agenda in the next couple of days will be the exact date of that funeral. And you can bet that will be on the agenda in the meeting tomorrow. Now, as far as the funeral details, Pope Francis during his life designed a lot of them. This is not going to be a huge state splashy funeral. This will be a pared back funeral, a simpler funeral, a streamlined funeral for a pastor, something more humble than what we've seen in the past. And he's made some of the changes. For example, tonight, Francis's body was placed in a single coffin made of wood and zinc, not the traditional trio of coffins of his predecessor. Now, he could be moved actually as early as Wednesday to lie in state in St. Peter's Basilica. And another change, he will not be buried in the Vatican grottos. Instead, he's chosen a different basilica in Rome, Santa Maria Maggiore, a basilica in the center of Rome. It was very close to his heart. He visited often. And then the attention turns to electing a new pope, the secret, mysterious process known as a conclave. It will happen in 15 to 20 days from today, from the pope's death. And as the cardinals come into town, more and more general congregations will happen. There will be formal meetings and informal conversations as well. And then, of course, they're sealed inside the Sistine Chapel. Voting will begin. Black smoke, as we know, once the ballots are burned, means no pope. And white smoke means a new pope has been chosen.
Welcome back. We are counting down to the market open in India, and let's just remind ourselves of what equity futures are telling us. Gift Nifty futures are teeing us up for an opening number in the region of 24,160. So a wee bit of an incline, given where we left off yesterday for the benchmark at 24,125 and some change. Dollar rupee exchange rate at 85.1220. Over in New Delhi, talks between US Vice President J.D. Vance and Indian Prime Minister Narendra Modi are progressing. CNBC TV 18's Parikshit Luthra tells us more.
US Vice President J.D. Vance met Prime Minister Narendra Modi at the Prime Minister's residence in New Delhi. He was accompanied by his wife Usha Vance and their 3 children. The Prime Minister first received all of them, met them together, and then there was a private meeting between J.D. Vance and Narendra Modi. Officials from the Indian side who were present include the External Affairs Minister Subramaniam Jaishankar, the NSA Ajit Doval, the Foreign Secretary Vikram Misri as well. Trade, of course, was an important part of the discussions between the two leaders. We know from sources that the Indian government is wanting to bring down the average tariffs for the US from 13.5 to about 9 or 10% right now, while the US government wants 0 tariffs across product lines. So will there be a compromise? That remains to be seen. The nitty-gritties weren't discussed by Prime Minister Modi and J.D. Vance, but overall we believe there was an intention expressed to resolve outstanding trade issues at the earliest and have a bilateral trade agreement that would be mutually beneficial for both sides. The entire comprehensive strategic partnership between India and US came up for discussion. There was a discussion on immigration, on cooperation in the space sector, startups, manufacturing, defense acquisitions. The energy partnership also came up for discussion. The geopolitical situation, especially the war in Gaza, the war in Ukraine, were discussed, and J.D. Vance gave his perspective on these wars and conflicts to Prime Minister Narendra Modi. There was a discussion on China. Both US and India have massive trade deficits with China, and somehow the Indian government also wants to be a beneficiary of the reordering or restructuring of US supply chains. So this is being seen by Indian foreign policy experts as a very important meeting. They see J.D. Vance as a crucial figure in the Trump administration, and this meeting could be important for the bilateral trade deal.
Parikshit Luthra there, thank you. In the meantime, India imposing a 12% temporary tariff on some steel imports known as a safeguard duty. It targets cheap imports from countries like China. India is the second largest steel producer in the world. The duty went into effect on Monday and lasts for 200 days. Let's bring in Derek Grossman now, Senior Defence Analyst at RAND. Derek, great to have you on the programme. Whether it's a China offset in the Asia-Pacific or a buyer of US defence equipment, where does India rank in terms of President Trump's strategic priorities in the region?
Yeah, thanks for having me. And I think India ranks very highly in the Trump administration, on the Trump administration's list of countries that it wants to partner with. You may have noticed that India's Prime Minister Narendra Modi visited the White House last month. He was one of the first foreign leaders to visit the White House, to meet one-on-one with President Trump. And so I think that underscores, the importance of the U.S.-India relationship in Trump's second administration. Of course, Trump and Modi have been good friends dating back to his first administration. So, there is the personalistic aspect to it. But when you look at the depth and breadth of all of the different, agenda items on the U.S.-India joint statement, I mean, it really is pretty mind-blowing that the U.S. and India have come this far.
Yes.
In recent years, when going back to the Cold War, they weren't so friendly.
You're quite right there, Derek, and both Trump and Modi do seem aligned on a number of issues, such as recreating a golden age of US manufacturing and making India really parallels and echoes that. From that standpoint, does it feel that India perhaps is in the front of the queue in being the first major economy to secure a trade deal and get 0 tariffs?
Yeah, it's hard to say, right? I mean, so when Trump announced the tariffs on, nearly all countries back on April 2nd, India got hit with a 27% tariff, which I think was much higher than perhaps they expected, especially since Modi had just been there and everything seemed to be going smoothly. But, we shortly thereafter, the U.S., I guess, put a 90-day pause on those tariffs. And so now we'll kind of see what happens. It provides some breathing room for negotiations. But I think VP Vance being there right now, I think will certainly facilitate a lower tariff barrier that India would have to the U.S. In the future.
Absolutely. And what then are the odds, Derek, in your opinion, of the United States and India closing a trade deal within that 90-day tariff pause period, or is it going to be by autumn at the latest?
It's hard to say. I mean, I think the 90-day period, which now, of course, is down to less than 90 days, right? I mean, the pressure is on for the U.S. And other countries that are hit with higher tariffs, to try to make a deal. And again, I think that more conversation is always better than less or even worse, no conversation. And so, we got to let the negotiations play out a bit. I think India has an inside track with the United States for the reasons that I've already outlined. And so I'm optimistic that there can be lower tariffs. Saying a free trade agreement signed between the two countries seems like it would be perhaps a bridge too far, not just because the U.S. hasn't signed FTAs bilaterally in many years, but also India has a pretty notorious reputation for being difficult to have trade agreements with. And so, we'll see what happens.
Interesting points. And all of this paves the way, perhaps, Derek, doesn't it, for President Trump to visit India as part of the Quad talks and the talks surrounding the security alliances. What's going to be on his agenda, and is defence going to characterise and define the bilateral relationship?
Well, yeah. I mean, I think defense and security is a big part of the Quad. And I think President Trump has, again, when Modi visited back in March, made it clear that selling U.S. defense equipment, possibly to include, modern fighter aircraft to India, right? That is high on his agenda, right? And also, India and the U.S. have shown that they have a similar view of China's rise economically and militarily in the region, and how that challenges a free and open Indo-Pacific. And so I expect that there will be conversations about China. But let's also be honest about this second Trump administration. It is quite different than the first, because Trump, he wants to have, I think, a better relationship with China. And I think part of the trade tariffs, and also those trade tariffs that are on China itself, are designed to bring China to the negotiating table to try to have a better relationship with Beijing. And so from India's perspective, I think India is hedging a little bit with China itself to ensure that it's strategically not, left out in the cold if there is a U.S.-China détente in the future.
Derek, great point about India perhaps pivoting to China, a key strategic adversary. And that was a narrative that we touched upon earlier on in the morning with a conversation with an earlier guest, Peter Alexander from ZBEN Advisors. This is what he had to say.
We haven't really seen India be able to step up on the manufacturing side to be able to challenge China. And arguably they should have. So where India is right now, I think, is more about how symbiotic they can continue to build with China. We know that Xi Jinping and Modi have met recently. There's been somewhat of a resolution over border conflicts that they've had. But I would not want to be President Modi at this point, because he's going to have to pick a side if the United States makes that an issue.
Would you agree with that, Derek? Does Prime Minister Modi have to pick sides, or can he work with both parties, the US and China?
Well, I think the way things are going right now, he can probably still not pick a side, right? Remain non-aligned or multi-aligned, as India likes to say. And, it's the same thing with Russia's invasion of Ukraine, right? That India has tried to be friendly with both Ukraine and Russia, both Russia and the United States and Russia and the West, and has done a successful job at it. However, when things kind of get worse, like take the Russia example, right? If Russia were to escalate its attacks on Ukraine to include, God forbid, use of a tactical nuclear weapon, it would be very difficult for India to just remain on the fence, right? And that's unbecoming of an emerging great power and a democratic one at that, to stay out of it, to stay neutral, right? So the same thing applies with China. If China were to attack Taiwan, right, would India be able to really remain on the sidelines in such a scenario when it's worked, hand in glove with the United States to counter China, and also purports to promote this free and open Indo-Pacific and
yes,
democratic values around the world? It'd be very difficult to pull off. But for now, I think it's certainly possible to continue to be non-aligned.
Understood, Derek. Secretary Hegseth may be the next ranking Trump administration official to visit India, and his focus would be on a deeper commitment from India to buy AI-driven autonomous systems, jet engines, armoured combat vehicles and munitions. Is that the right way to frame that particular conversation?
Well, I think there's a lot of synergy in the AI space when it comes to the U.S. and India. And so that, I think, is probably the next level of their defense and security cooperation. I guess the thing that I personally worry about is that AI is applicable. Of course, it's applicable to defense, but it's also applicable to a lot of other things, civilian use services, right, that I don't want to see get lost in the mix, because I think there really is a very high ceiling for the U.S. and India to be collaborating on AI, especially considering that China just came out with DeepSeek and is doing a lot in the AI space.
Great points, Derek. We'll leave it there, sir. Thank you very much indeed. Yes. Derek, thank you very much indeed for that. Derek Grossman there from RAND. Coming up, counting down to the market open in Mumbai. We're back in 2 minutes. Let's take a look at the Indian markets, which are just about to join the trading day and responding positively, up by just a fraction at this stage at 24,165. Let's take a look at the dollar against the Indian rupee. Remember that the dollar broadly, as measured by the dollar index, has been at a 3-year low. Dollar rupee rate at 85.1425. Little changed. Let's take a look at how cryptocurrencies are performing, and we are focusing on the crypto landscape in India. The country has been topping the charts when it comes to the adoption of the asset class. A report by Chainalysis found India at the number 2 spot in Asia when it comes to cryptocurrency value received. That was for the period between July 2023 to June 2024. This despite tough taxes and evolving regulatory stance. India levies 30% tax on gains from crypto. Let's take a step back and assess the crypto ecosystem as it applies to India. Bring in Ashish Singhal now, co-founder of CoinSwitch. Ashish, great to have you on the programme. Firstly, just give us an overview of adoption of cryptocurrencies in India. How big is the addressable market as it stands? And is it retail or institutions who are most active?
So currently, Sri, in the Indian ecosystem, the crypto is still largely unregulated in India. Although from 2018, when it was banned by RBI, to 2020, when the Supreme Court reverted that ban, there is a lot of adoption that has happened in the last 5 years of crypto being open for the investors in India, mostly driven by retail investors. Retail investors have been driving the entire curve in India. We ourselves have over 2 crore Indian users registered and investing into crypto. So this entire rally is largely driven by the retail investors overall.
Understood. Ashish, give us a sense of the flows, volume and user growth as it applies to the CoinSwitch trading platform. And where are those numbers heading in the next 3 to 5 years?
Stop. So compared to the overall, the global market, India is very small compared to the trading volumes to the global world. You can say that, about trillions of dollars worth of trading happens every day across the ecosystem. But in India, it may be somewhere close to about $100 million. So it's still very, very small. Comparatively, India is more, largely focused rather than trading into holding. Retail investors are buying and selling crypto, not doing large high net worth trading or high frequency trading, because India has 1% TDS. What it means is in every trade, 1% of the value is deposited to the government. So India doesn't have a lot of HFT players who are doing high volume trading, but a lot of holders, a lot of investors who are holding these cryptos in hopes that the value will go up and they would be able to sell at profit. So compared to the relative growth to the entire industry across the world, India still plays a very small part, largely due to the taxation policies in India. Coming to CoinSwitch, we have seen, the last year, we have grown over 100% in terms of the trading volume. But again, it is still relatively low. In next 3 to 5 years, we expect India to bring in a lot of regulations, especially regulating crypto exchanges and maybe making a licensed regime, which will bring back trust of the Indian ecosystem, helping even HNIs and, institutions to get into the crypto space, which we have seen in the US happening through ETFs, right? So in the next 3 to 5 years, the expectation is very high that the regulations would come in, taxation would go down, which will bring in the kind of global parity of crypto trading in India as well.
How much of a problem is it that Ashish, regulatory frameworks and guardrails are practically non-existent, and it's interesting what you said about those regulations perhaps coming into force next year. What is your advice then to the regulators and the competent authorities on striking the right balance between supervision and oversight on the one hand, which is necessary, and innovation? The regulatory framework shouldn't be too draconian, should it? insofar that it stifles innovation. So how do they strike the right balance, and what's your feedback to them?
No, absolutely. And I think India should follow lead on what is happening across the world as well, right? We have seen in the US that the regulatory push after the President Trump has been elected have been quite interesting to see. A lot of positive regulation coming across. The SEC, who has taken action across crypto firms, have been, died down. And crypto's industry is flourishing in the US. And India cannot be left far behind. We have kind of been left behind in the Web2 ecosystem, where the Amazon, Google, Microsoft of the world have come from the US, and India has always been the service provider. But blockchain and AI are the new levelers in the technology space, and India cannot be left behind. And with the right policies, while this sector does offer, some challenges, but policymakers need to ensure that, because of these policies, India is not left from innovating in this space. Today, we are the third largest startup ecosystem, have over 100 plus unicorns, but that is not true in the Web3 space. Web3 space, Indian developers are leaving India and, settling into territories like Dubai, Singapore, which are more crypto friendly. And India cannot, leave this talent behind. And with the right policies, I definitely expect that India could emerge as a crypto hub for the world, not just from investment ecosystem or a trading ecosystem, but also from developing and solving use cases on blockchain itself.
Ashish, and until the crypto sheriff, if you will, rides into town, it's going to look like the Wild West, isn't it, in terms of the ecosystem? And doesn't the lack of regulatory oversight mean that the system is vulnerable to fraud and hacks of the type that we saw with WazirX, that you're very familiar with last year? Could we see more of that?
Absolutely. Yeah. No, absolutely. And that is what we advise to the government as well, that, running away from the sector is not the solution. Because if you don't bring the right regulations, right user protections in the space, these scams, these fraudsters will keep on coming into this ecosystem, and the right players who are doing all the right things in the ecosystem will get hurt as well. And we will not be able to compete with the world when it comes to crypto and blockchain ecosystem. So bringing regulations, especially, giving licenses to the exchanges, creating an entry barrier so that anyone and everyone cannot just enter the space without following certain user protection guidelines. I think that is the need of the hour, and that government should really focus on, and making a license regime where every exchange, every crypto operator needs to go to the government, able to showcase that they can deliver value to the users and avoid these scams overall. I think that is the need of the hour for the Indian ecosystem.
Ashish, and you've offered to acquire WazirX's users and put forward a recovery plan off your own. What is the latest there? What are the lessons learned? And how are you looking to rebuild trust in the system?
Yes, so we have offered about 600 crore worth of rewards to the WazirX users. They can come to our platform once the withdrawals are open on WazirX, which we expect should happen next month. By next month, they can deposit those crypto onto CoinSwitch and be awarded up to 600 crore in value, which we believe would make up for all the losses that they have incurred in the WazirX alleged hack, right? And that's where we want to rebuild, because WazirX has been the oldest player in the Indian ecosystem. They have the OGs, the real crypto believers on their platform, which have kind of lost trust in the entire ecosystem. And it's not about one player. They treat every single player in India with the same eyes, because if one can get hacked, the other can get hacked as well. And that's what they believe. And that's what we want to rebuild with CoinSwitch KS program, helping these users differentiate between what CoinSwitch offers and what others offer, and able to build the trust again in the crypto ecosystem in India through this recovery program. So it has been going well overall, but I think the real value would come in once the withdrawal are enabled, hopefully next month, on the WazirX platform. And these users would be able to see real value. Once they come and onboard CoinSwitch, they will be able to see real financial value, real recovery of losses through CoinSwitch KS program.
Ashish, we've got about a minute left. Is a central bank digital currency needed to really build faith in the system?
I believe so, but that is very different from the public crypto like Bitcoin, Ethereum, because in India, I think our financial ecosystem is quite strong. We have UPI, we have India Stack, which gives payment happening within a second, right? You can pay anyone, any merchant, any user within a second. And that is the kind of technology stack that already exists in India. I think with CBDT, what can happen more is remittances. A user in India has a large population of unbanked users, right? Because banking infrastructure cannot be set up in remote villages very easily. CBDT provides them an access to the financial ecosystem without opening a bank account. Through CBDT, they would be able to access any financial ecosystem, able to take loans without attached to a bank account. So CBDT is definitely
it's a step towards digital inclusion.
Yes.
And financial inclusion.
Yes,
Ashish,
yes,
on
yes.
that note, we'll have to leave it there, sir. Thank you very much indeed for joining me. Ashish Singhal there from CoinSwitch. That's it for today's edition of Inside India. Tomorrow we'll be focusing on India's EV sector with Somesh Kumar of EY India. Elon Musk recently revived its plans to go to India this year as Tesla enters the Indian market, and we'll look at the broader sector amid a government boost and hurdles to adoption. That's all the time we have today on Inside India. Do keep watching CNBC. Dan Murphy and Access Middle East is coming up next.